Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I've been asked, how did you get started and how did you get to be able to do what you're doing? I have told my story of woe about losing $40,000 when I first got into trading a large account in different videos that I've had, emphasizing that I felt that the problem in my failure of being successful was due to the education that was out there, the information. There was too much information and education and all that sort of stuff. So I focused on that part of it. That's not really where it began. And so I thought I could use this video to refer people to instead of telling my story in every video that I do. So this is my FX journey. It's a beautiful June day of early June, very early June of 2024. I wanted to get out onto the porch. We haven't even set it up yet for for summer because it's been cold and rainy. I'm in the Lakes region of New England and New Hampshire, and the weather has been less than spring-like, let's say. Okay, so I don't want to drag this out too long because it's just my story and who cares. I have been interested in studying the general financial markets since the mid to late 1970s. I've done stocks and looked at options and commodities. In fact, I traded stock options pretty heavily for 4 years, and specifically at the Black-Scholes equation, which is the options pricing model that was used for that, and noticed some anomalies in the math that from a physics standpoint I understood the effect that that particular component of the equation would have to drastically under-inflate things or over-inflate certain things. And I said, and it's a time-based thing. I said, okay, this is a game. I can't win. Some people can. There was a broker in the agency where I was conducting business, and he was all in options and doing spreads and condors and all kinds of stuff, and he eventually lost $175,000 of his money and cleaned out all of his clients, and he was sent packing. And so that's not what I want to do. But I've had that experience, that early trading experience as far as options go. When I got out here to New Hampshire after graduating from college with a bachelor's degree in physics and almost a minor in math, and came out to get into graduate school and determined that that really wasn't what I was going to be strong at, and so that's how I ended up in taking a look at the financial markets and having an interest in them. I've always had an interest in the financial markets. So now you got to jump forward to 2007. I mean, it was a Sunday, and I don't ever turn the TV on during the day, and generally on Sundays, not at all, because I'm out doing stuff. But that particular Sunday, I clicked it on, and I was surfing the channels, and I don't know what month it was. It was in the summer, I think, of 2007, and there was this trading screen as an ad. And I turned the volume up, and it was about this thing called FOREX. And the ad was advertising a book that somebody had written. And I thought, oh, that's interesting. I've never heard of that. Let me get that book. And immediately, with my background, I saw the potential for a retail trader to be able to make sense of this market and to trade it. This particular person was bringing over a lot of general financial indicator analysis, a lot of moving average stuff, and probably what would be referred to at this point as, similar to a Bollinger Band. I found a big interest in it and started studying the Forex market. I bought books and books and books. That's what I am. I'm an academic. I read and I study. And so that was 2007. I started writing computer simulation programs against live data as well as random number generated data. That if you build a good random number generator, you'd find that it's very similar to the patterns that you're going to get splattered out in the Forex market, which is as I suspected because of the size of the Forex market. Back then in 2012, it was I think about a $3.4 trillion a day market. And today, in 2024, we're at $6.7 trillion. So it's grown dramatically. Back then, there was a very small component of retail traders that comprised that volume. It grew to about 15% of the market, somewhere around the $4.5 trillion market. They were doing some surveys and stuff and thought that about 15% of that daily dollar volume was retail trading, centered around the 6 major parent currencies. And then as we move into 2024, obviously, at $6.7 trillion, the retail market can't keep up with that. And so I think right now, today, we're around 5% of the overall market. But in 2012, when I stepped back from all the simulation work and said, maybe I ought to try to trade this. I was involved in real estate investment at the time, and I had a 33-year career as a software engineer. And so I was combining that software engineering background and a career in real estate investment, because I ended up about 40 years in investment in real estate. That's how I was able to retire, certainly not through my software engineering job, although I was making 6 figures as a software engineer later in my career, which was pretty big money at that time. It wasn't that money that allowed me to retire comfortably, so I could sit here and pontificate in videos. However, the 2012 came around, and I was beginning to wind down from both of those careers, looking at retirement, which I didn't do until 2015. But in 2012, I said, I'm going to open a mini account, a couple of $1,000, trade 2 minis, and see if all this simulation study and the studying that I had done, because I'd read hundreds of books, taken courses, like you all are doing, and lost that $2,000. That went pretty quick. I must have got something wrong. So I did a little bit more studying and thought about it, and rearranged my trading plan a little bit, more in line with what I was seeing some of the other folks were talking about that they were doing. Little did I know that that's not what they're doing, but and lost another $2,000 fairly quickly. I must need more education. And so from 2012 until about 2018, I was back into studying the currency markets, and took a course and dozens and dozens of other books, and study, and reworking how I was going to trade this market. I thought I had it, so I think it was 2018 or something like that. I had started Longwood Currency Trading in 2017 because taking those small accounts, and even if I lost the money, I still had to file tax returns against it. So in order to that first when I put those documents in front of my accountant, they said, we don't have any software to do this kind of thing. So it cost me $600 trading a couple of mini accounts, and losing them cost me $600 in accounting fees to pay for that. So in the meantime, somewhere in there, I wrote a program which would strip all the information off my broker report and save that data into a database, and then create the 8949 federal income tax report, simulated report on transactions for those types of financial vehicles. But in 2018, I was ready to go, so I took $45,000, put it into my account, and started trading that the way that I felt that I was seeing everybody else trading. what they were saying that you needed to do. And it didn't take long, but $40,000 went gone. It went fast enough. I mean, it wasn't instant. It was over a period of a few months. So wait a minute. I'm not stupid. I'm educated. What's the problem here? Let me look at this differently. Let me forget about what all these people are talking about at me here. Let me think about what is going on. And I sat down, and I've said this many times. It took me 15 minutes to figure out what I was doing wrong and what I should be doing in order to be right. And I wrote down 3 rules. It was on a little piece of paper. I wrote down the 3 rules that have remained consistent to this day. And I took my remaining $5,000 that was left in that account. After losing the $40,000, I had $5,000 in the account left. And I just about doubled that in about 4 months, 4.5 months. I was within a couple $100s of doubling it, and I thought, well, that's pretty cool. I get it now. I see that everything that I learned, quote, was incorrect. Indicators and patterns and all this other crap are not valid. The currency market has to be looked at differently than all the rest of the markets. If you can learn to trade the currency market, you trade everything. But if you learn to trade futures or you learn to trade bonds or whatever, you may not be able to come in and trade the currencies. You need a specific kind of rule to trade something as enormous and as vibrant as the currency market is. And that's how I was able to double that $5,000. Now, would I be able to take a $50,000 account and double that? I don't know. That would remain to be something to behold. I'm trading a 6-figure account now, and I've had 80%, up to 80% return against my risk, 6-figure account size risk. I trade very aggressively, and so I went from 86% up against risk. I think it was in 20 or 21. I was up 80% at the end of the year, toward the end of the year, and got involved in a series of trades that did me deadly harm. But I still ended up the year 46% ahead on the risk. I mean, that wasn't because of the market or anything. It's because I was trying to do something different. I'll get into that in a couple of minutes. But in any event, as I discovered what those rules were, the market became clear to me as to what the problem was that I was trying to solve. I was trying to solve the wrong problem. And when you try to solve the wrong problem, you're using incorrect rules to do that. And that's what I saw everybody doing. Well, I just changed that, and then, as I said, when I got to the point where I was successful with that $5,000, I took $10,000 more and put that into the account, traded that for a while, put $50,000 more into that account, because I knew how to trade. So I was unafraid of adding money into the account in order to make those trading decisions. So that's the progression that I went through. In fact, I think it was 2022. I started out in that 1 to 3 lot trading realm because I knew, and my rules show how to grow the account as to not the account, but the number of lots that you trade. You can't just go from trading 3 minis to trading a $40,000 account. You shouldn't go from trading 3 full lots to trading 6 or 8 full lots, because there are different things that you need to do. And in my videos, I've explained what those things are, so I won't belabor the market. This is my story, my story of my journey, not how to trade. But incorporating those principles, and that's how I teach and that's how I trade, is by principles, not by systems or indicators or anything like that. You have to change indicators. You have to change systems when the markets change. When you trade with principles, you don't change anything. I started off that year, whatever it was, trading 1 to 3 lots. And then I increased that to 3 to 5. Then I increased that to 5 to 6. And I think I might have jumped to 8. In any event, I went from trading 3 lots at the beginning of the year to positions of better than 20 lots about 5 months later, because you have to step up as you go. You can't just take a jump at 3 lots where a 10 pip loss is $300 and jump to trading 10 lots where a 10 pip loss is $1,000, because you could take all of your money that you saved and in three or four losing trades you could be done. So there's a way to step up. The advanced solutions course, part of that, I spend something like 20 pages discussing how to trade large lot size positions through building positions and staging into positions, reverse staging, and all that other sort of stuff that's advanced level. And you see so many people out there today teaching compounding and staging into positions with mini lots and stuff, and it's just, my rules taught me that you don't make more money by making more pips or making more trades. You make more money based on the percentage gain against the size of the risk that you're putting forward. So it's really a different view of how you trade. It isn't I'm trying to make money. It's how do you use proper risk and money management in order to achieve the goals that you have. But all of that is encapsulated in those original 3 rules that I developed. And those 3 rules come under what I call the umbrella of what I call the it's the life cycle of a currency position. You've heard me talk about that many times, and that's a rip against my software engineering career, where we used what's called a software development life cycle, an SDLC. And an SDLC is a complicated process of breaking a problem up into a series of little pieces, solving each little piece, hooking that piece together with the next piece, solving that piece, hooking that piece, iterating back to the first piece, and tracking back through. So it's a process of iterative development. And so my life cycle of a currency position is an iterative learning process as well as an iterative trading process. So the life cycle of a currency position consists of the solutions to 3 problems: your entry problem, your live position problem, and then how do you get out? Those are problems. And so the life cycle of a currency position is entry analysis, position management, and exit methodology. And each one of those rules has 2 to 3 corollaries to it, or conditions, are better stated as conditions, because if this condition is true and that condition is true, then you can do that. If it's not true, but this is true, and this is true, you might want to do that. But beyond that, you only have maybe a couple of branches of conditions in any of the rules. Basically, there's about 10 conditions, probably not even 10 conditions in the 3 rules. That's all you have to learn how to do. How do you solve each one of those conditional attributes? Now, you could say, and I've brought this up many times in my videos, in talking about complexity in the market. The currency market is the most complex financial market there is. Not only because of its size, but because of its distributed nature. If you know anything about the currency market and the purpose of it and how it's structured, then that distributed nature creates complexity. And so people are trying to solve that market problem with complex solutions. That's what I try to do with the background that I have, and looking at what these other people were doing, Bollinger Bands and confluence of indicators and flag patterns and all this stuff. You can't solve an ultimate complex problem no matter how you try, and there would only be a few people that could do it if that were the case. And you can't do it obviously through fundamental analysis. I'm just not a big fan on fundamental analysis for the currency market at all. Now, the big FX trading institutions who are handling the client orders that are coming in, they have to know fundamental analysis. They don't use technical analysis because technical analysis doesn't work anyway in the first place. So if you want to ask anybody about that, ask a bank trader if they use a Bollinger Band or an RSI, and they'll look at you like you have 2 heads and tell you you're full of shit. But fundamental analysis is critical not because of the market, but because they need to know how to satisfy their client order. We as retail traders don't have to worry about that. We don't have clients we're trying to satisfy orders to, so we don't have to have any fundamental knowledge at all. All we should be aware of is that interest rate theory on an individual country basis is an indicator of the strength of that particular country's currency. And you look at what are the components that determine interest rate policy for a country. And there's things like unemployment, non-farm payrolls, producer price indexing. There are 3 or 4 major components that cause the federal banking committees to look at their interest rates and determine how they need to tweak them. But because they only do that 3 months, every 3 months, or sometimes they don't do anything. Interest rate could remain the same for years. It's like a big ocean liner. You just don't flip the wheel and have the thing turn right away. The currency market's too large for that. And the orders that these people are putting in at $6.7 trillion a day cumulative market, some of these guys are dropping $2 and $3 and $4 billion orders, not at a time, but because if they all did that, they'd move the market, and they'd move the market against them. They'd chew themselves up, and they wouldn't be able to satisfy their client order. That's why you see the variations in pricing that you have, and you see the clumping of structure, and that's order flow structure that's clumping there. So you look at that, and you determine that from a fundamental standpoint, though the interest rates are the dog that lead all this stuff, the only thing you need to be aware of is what are the current interest rates and how likely are they to change, and is anybody concerned about unemployment increasing or whatever, to determine the stability of the main direction that price for that country is moving in. That's it. And then you can go to any of the good FOREX channels and get a hint of what that fiscal policy on the individual countries happens to be at that time as a retail trader. And then you use principles based on that. In any event, I was talking about the complexity of solution to a complex problem. Well, you can't solve a complex problem as a retail trader, so you don't even want to try. Well, how do you do that then? Well, you simplify things. You simplify it by removing stuff that you don't need to know. In many of my videos and in my courses, I talk about the permutation of decision making. In mathematics, it's called a permutation. When you look at 2 things, how can you order those 2 things? You have object A and you have object B. Well, you can order it, there's just object A, or there's just object B, or there's AB, or there's BA. So for 2 objects or 2 decisions that you have, 2 directions you can order those in 4 different permutations. If you had 3 objects, you'd be up to 21. When you get to just 5 objects or 5 things that you're looking at to help you make decisions, you have 325 different permutations you can put those 5 things into. And so when I say I have 3 problems, I don't have 21 different permutations I can arrange those 3 problems in, because you can't do exit methodology before you do entry and before you do position. Those things are chronologically oriented. So when you have chronological problems and you have chronological conditions, then if I had 4 conditions to solve a rule, to satisfy a rule, I don't have 180 different permutations because the conditions are chronological. So everything that I built right at the beginning was chronological, because I know how to solve problems. I know the event response model. I understand problem solution. I understand Boolean logic and stuff. And so I built those rules. They were sloppy in the beginning. They were only structured rules, but I haven't changed them. I've clarified them over the years, but I haven't changed them. And I think that's the most important thing that can come out of my FOREX journey, is that well, the summation of all that As most of you know, if you've watched my channel, I've been involved in the martial arts and karate for over 50 years. And one of the solutions that you look for in martial arts is developing power. Because when you hit somebody, you don't want to go like that. You want to hit them. So it's power dispersion. So using my physics background, I can define from a mathematical and physics standpoint how you develop power in the martial arts. And it's complicated. There's 7 parts to that. The Chinese make it very simple. They say slow makes fast and soft makes hard. If you do this many times, slow makes fast, soft makes hard, I can do that. And trading and learning trading is the same thing. It's a very complex soup of stuff. But you can simplify that, which is what I did in the life cycle of a currency position, entry analysis, position management, and exit methodology, and simply limiting the number of conditions necessary in order to have an entry signal, for example. I have 4 conditions. You can debate whether there's 3 or 4. I break it into 4 when I'm teaching it, but when we actually use it, there's only 3 conditions. Is there this? Yep. Is there this? Nope. Okay, we're done. Is there this? The first thing? Yep. Is there this? Yep. Is there this? Yep. Is there this? Yep. Okay, we make the trade. It's simple. And I think that is the foundation. I don't think that. That is the foundation of how I trade today and how I help others in their trading journey. It's very difficult, though, for folks to give up and let go of the complexity of their solutions, because that feels safe. They can say, when the RSI reads this and I've got confluence with whatever, Bob's deadly spider algorithm, I should take the trade. That's something concrete that you can base that decision on, whether it's correct or not, and it's not correct. However, if you have a principle, you can apply that principle, because I teach extensibility of rules and malleability of the rules. The rule stays the same, the conditions stay the same, but you can manage them. For example, if I'm going to walk outside, I'm going to walk outside whether it's raining or whether it's sunny. However, the condition is, if it's rainy, put a raincoat on. That's the kind of extensible rule or a condition that we have to have in our trading. Otherwise, we're hopelessly lost in the morass of permutation analysis. You're just not going to be able to do that. I hope this story of my FX journey helps you in putting away the complexity of what you're looking at in trading. It's not complex. It's incredibly simple. And when I talk with somebody about it who's interested in actually listening to what I have to say, they go, it can't be that simple. And I, yep, it is that simple. What's complicated is us. We're the problem. And when I have somebody contact me about mentoring, and they say, oh, I'm an engineer, I'm an architect, or I'm somebody technical, I say, man, you're going to have a tough time, because you're smart and you're used to solving problems, and this isn't anything like that. You have to let all that go. And a lot of them don't want to let that go. They don't believe me that it's that simple. How can you trade the 6-figure account confidently with such stupid simple rules? Well, I don't know. Because they work. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.